join this
Amit,
community.
how far off are you from 17K? Because you've been at 16.9.
Bro, I'm at 16,996. It's like
Can we get
if
four
of you can sub to the
subscribers?
channel.
4 subscribers for Amit. There's 186 of you mofos here. 4 of you hit that subscribe
No, we
button.
need 5. 16,995. All right, we need 5 people to sub.
And look, I'm sure there's some people that come into the chat all the time and they're ashamed because they don't have that button pressed. Okay. Your name doesn't pop up in some sort of feed. It's just a number. So
we're at
he's not
9.6.
going to know.
We got 4 more. We got 4
He's
more.
not going to know if
Dude.
you guys just press that button. So just make it get to 17,000.
I'm sure there's 4 people that are not. Yo, I lost 3.
Well, guys, you have to look to see if
Such
you
a
guys
great
are subscribed.
community.
Don't
Thank you,
press
guys.
it just for fun.
Some people were mentioning it in the Discord, like we shouldn't be addressing Noto to come on the pod.
Yeah, that's stupid.
And,
Whoever said that is said a stupid comment.
That person's not in sales.
To have a retail community that cares about a stock, do you know how many CEOs would kill to have a podcast dedicated to them, even if they don't publicly acknowledge it because of PR? And I think Noto loves this because at the end of the day, we keep interest alive for the company. It's earned media for them. And for us, it's like, hey, we get to make content, we get to form a community, and we hopefully get to appreciating the upside. But CEOs in this noisy economy, they need people talking about their companies.
One other thing to add that's huge. It's infinite ROI for them. They don't pay us. They don't sponsor us. They don't even give me a fucking hoodie.
I don't know.
I mean, the fact that we do SoFi Weekly every single week, having 200 people come on the live, having thousands of others watch, the highlights and the replays and all the little clips and engagement on Twitter, that's all free for SoFi. And
if Anthony Noto came on the podcast while it being live, it's only downside. There is no ROI.
I wouldn't say it's only downside. It could be great.
No, because there's way more risk.
When I did the interview with Richard Barlow, they had to take 3 weeks before they approved it, right? Because they have all their legal shit. So Anthony Noto, speaking with the global head of research at Bank of America, he knows shit's going to be fine. But speaking with 4 jackasses like us, like he doesn't know if shit's going to be okay.
Well,
right?
so no, here's the deal though. And this is the value proposition for Anthony Noto. First of all, your entire brand is appealing to your users, your retail community. He's actually hopping on Twitter to fix people's issues himself. Obviously, he knows it's going to get attention. Obviously, he knows it's going to be good press. Number 1. Number 2, we are totally amenable to making this pre-recorded, to making this approved by their IR. If there's anything that's said that's offside or that's not approved by their actual public relations team, we can cut that out. Number 3, as the SoFi Weekly podcast grows in attention, more and more people are wanting it. The amount of goodwill that he will get with all of these retail investors that are taking time out of their week to do this pod for free, I think that is a really cool message that goes along with his entire brand and with SoFi's entire brand. So I do think that it is more upside than it is downside.
It's
Riley,
infinite upside, as you said. If you type in Elon Musk on YouTube and just filter by day, there's literally millions of videos with his name in it per day. I mean, how much more earned media could you ask for? This is why they don't need to do advertising. SoFi paid $600 million to acquire customers, right? Like
Chris Hager literally got 15 minutes from Chris Lapointe, wasn't allowed to really post the video, but made this Seeking Alpha article just on snippets. And the amount of good that it did to completely crush an entire bear case that people had about SoFi's stock-based compensation was absolutely insane. The ROI for 15 minutes or 30 minutes of Chris Lapointe's or Anthony Noto's time has the ability to carry forward in multitudes in terms of what it can bring in terms of goodwill, awareness, and even hype or excitement around that stock.
Yeah, and one podcast feature is not going to pump the stock. It would literally just be a, hey, shareholders, we like you. We appreciate you. Thanks for sticking with us every day.
We'll send an edited video to them and be like, hey, whatever you guys don't like, we can cut.
By the way, that's not a choice. We have to do that.
Yeah.
It's like that's not like we have to. Literally, that's what's going to happen.
Yeah, we'll literally mute Amit's line so he doesn't say anything crazy. Me, Tevis, and Riley will talk to Anthony Noto, and that'll be great. I will fly to San Francisco if Anthony Noto says, yeah, come to the headquarters. I'll put you guys in the boardroom.
I'm there tomorrow, next flight.
I'm packing my bags, boys.
Let's get into the first piece of news. $2 million of FDIC insurance has been guaranteed.
Plan to roll out a service where we provide up to $2 million of a member's deposits being insured with FDIC insurance. When we first launched SoFi Money, we actually provided an opportunity for our depositors to have more than $1 million of FDIC insurance. Back at that time in 2019, it wasn't that attractive. We asked our members if they thought it was helpful, and we didn't see a positive response. And it was a little bit costly, and we decided to end it. But given the environment we're in now, even though we have 90+% of our deposits insured, we want to roll out this additional service where that up to 2 million of their deposits will be insured with FDIC insurance. So we'll see how that impacts the rest of the quarter as well, but feel comfortable with our prior guidance for the quarter and the year.
I know there's a huge discussion on Twitter right now saying that SoFi just did this because of the SVB collapse. They worked on this technology within a week and they threw it all together and made it available to everybody, which that's not true. Like they've had this before back in 2019.
Well, yeah, there was a list of all the other banks that were collaborating in this, was there not? That list was circulating somewhere.
But it's part of Apex's network, I think. Apex is our clearinghouse. They make sure all of our investing stock trades go through, but they also have a program where we can up our FDIC insurance, I think.
We had $1 million. This was before a bank. Right? We were paying a decent portion. What we're pretty much doing is renting a charter, having a partnership with a bank where you give them their deposits. And in order for them to do that, they are going to give you a cut back. But if you're actually spreading those deposits out across 4 separate banks to get that 1 million, you're giving a spread to each one of them. And it's kind of increasing your admin costs. But also, we are in a very different place now as well. We're making a ton more per dollar on the actual deposits that we're bringing in. And there are a couple things that we have to understand. Like 250,000 of these dollars is very specifically our deposits. We can use this to lend out to our actual loans and get 190 basis points as of last quarter and the spread difference for our loans. We're still going to be making a lot of money on the deposits that are actually going to those other banks. There's going to be a difference in the actual administration on how we actually use those deposits to fund loans. It's going to be very different, but we could see a lot of new net interest income instead. And in that case, I mean, it still is great. And I thought this was an amazing move from SoFi, but I'd love to hear you guys' thoughts.
I would imagine that they would have never done this if it weren't for the SVB situation. The increasing the APY on savings and this sort of go hand in hand, in my mind, to serve as a net to capture all of those deposits that are leaving these banks like Signature, SVB, and such. Anthony Noto, had this fireside chat this week, and there he talked a lot about, the behind the scenes planning on a lot of these decisions that went in on student loans, what the planning and logic was there on a lot of these other decisions with regards to their lending and their product rollout in general. So they're presumably extrapolating that logic. There obviously was a cost benefit analysis to say, in the worst case scenario, even if we're losing incrementally on all of these deposits that we're now insuring up to 2 million FDIC, just the fact that we're capturing more users makes up for that when you consider the LTV, the lifetime value of those users, right? And so on aggregate, it turns out to be a good move, capitalizing on the macro weakness and the sentiment from a macro perspective.
Yeah, exactly. I think it was just great timing. And I messaged you this, I think, Tevis, during your live stream, but I think Noto is a wartime CEO. He is capitalizing on everywhere where a lot of people would think that this is actually a bad thing. Turns out to be a great thing in Noto's eyes, right? Like student loans get canceled. Our personal loan portfolio booms. Once we actually turn down into a declining rate environment, our personal loans might turn down a bit, but then we'll just jack up our home loans and student loan efforts. And right. This amazing balance in change in strategy is Noto's true expertise here. And I don't expect anything less from him at this point. It's just constant execution credit for him getting it right every single time.
And I feel like that flexibility is interwoven into their DNA as an innovative fintech solution that's going to be disrupting traditional players, right? Like that is their bread and butter DNA. And they're showing it in terms of the flexibility that they have with their moves, especially when you consider student loans being canceled, pivoting their main profit centers to the other drivers of business, introducing supplementary products, promoting that ecosystem through SoFi Plus and other methods through the bank charter. They've shown time and again this flexibility. And this flexibility, more importantly, is perfectly synergistic with their brand offering as this innovative disruptor into a very traditional space.
I liked it a lot because I felt like it just gave people a lot of reassurance. because SoFi still is classified as a neobank. They're classified as a bank that theoretically could have a bank run if people feel unsafe. I think a stat just came out today that U.S. consumers took out $100 billion from banks last week. The understanding that reassurance is there hopefully should drive up more deposits and let people know that although SoFi may be suing the government, they want to get your money right and want to keep it as safe as possible.
So I want to clarify just some, like whenever they say 90% of depositors are insured, it's actually 90% of deposits. And the importance is it's actually so much less. It could even be somewhere along the lines of like 98% of people are insured, but the 2% are obviously, you know, they might have 10, $15 million at that bank. So it's actually making up for so many people under a single depositor. 10% of deposits is like sort of how, you know, the top 0.1% of America makes up for like 50% of the overall, you know, stored wealth or whatever it is, because most people definitely don't have 250,000 lying around.
So the counter to that, I actually thought that it was going to be more people out of that threshold and more detrimental to that cost benefit analysis. But since they have 90% of people within that threshold, relatively speaking, even if they are losing money on that incremental 10%, they counteract it with the gained new users from that move. But the reason why I thought that they would have more users or more deposits, let's say, outside that bound is because we know that SoFi has very strict thresholds and guidelines as to what they accept. And if you have the majority of members that are making 160, 170,000 per year, presumably you would imagine that a large portion or even higher than what they reported are going to be outside that 250K threshold.
It's also SoFi Money members. There can be a lot of deposits. If it's separated into, you know, their brokerage accounts and stuff like this is under the SIPC. So they have another $1 million of coverage that they might have in some investment account that would be separate from their actual money accounts, what they would be storing under the FDIC.
Before we went live today, I got a message on Twitter from somebody that follows us very closely. He got an update for SoFi that not a lot of people have yet. It looks like they're setting up for Zelle payments. On the right-hand side, whenever you look at your contacts, it also gives you literature on how to use Zelle. So we knew this about a month ago. Bindir 9000 saw that they were doing some tests on it, but now it looks like they're getting ready for a rollout. Anthony notices we have a few things coming out in the next few weeks, one of which is the 2 million FDIC. That's only one of the things that is going to be coming out for sure in the next few weeks. My guess it's going to be Zelle.
And just to answer one person in the comments who asked, what is Zelle? Zelle is a peer-to-peer payment system. And what it does is it allows users to send and receive money from their bank account using just their email address or their phone number. Basically, users can send money to friends and family. They can split expenses. They can pay bills. It's designed really for just fast and secure and easy to use transfers.
It is interesting how Zelle came about. This was predominantly made just because Venmo started this whole instant payment thing that took massive market dominance, and all the huge traditional banks in the US said, hey, let's band together and make our own payment network so that nobody can compete with us. So Zelle was made. A few years later, there's a lot of fraud claims on the technology. A lot of people use it to scam other people and use it nefariously. So all these big banks start paying money, but I guess it served its purpose.
I think it was Bank of America that really caused an outrage, I think last month, where people were lining up to the bank and they couldn't get their money because of an error, which later we found out that was an error with their Zelle integration.
So I guess the difference is versus Interact is that there's an actual app for Zelle though, correct? Like it's a little bit like Cash App where you can add all the names and everything, but it's also like not a digital wallet because you're just connecting your bank and then your friend's name. Is that sort of how it works?
Yeah, you can download the app if your bank does not support Zelle, which SoFi doesn't at the moment. So if I'm a SoFi user and I want to send money to somebody, everybody much rather get paid through Zelle because it's the easiest, because it's the most widely used and everybody has it. So everybody wants to use Zelle. But you can use Zelle. It's just harder to sign up and get it like to use. You have to go to the Zelle app. You have to put your phone number in. You have to put your account number and all that stuff. Whereas all you have to do to use Zelle on other banking apps like Wells Fargo or Chase, all you have to do is put your phone number in and put the person that you want to send the phone money to and put their phone number in, and that's it.
Do you know if there's fees with Zelle, Riley? Because I know with Interact there is none. So
there's none.
I was just going to say, I'm sure there is fees. It's just
So-
not customer facing.
I just asked ChatGPT. It says Zelle itself does not charge any fees to send or receive money. However, some banks and credit unions may charge fees for using the service and certain types of transactions.
I'm sure the bank is paying for those integrations. Hindenburg Research delivered a short report on
Do you know who
Block
Hindenburg is?
Incorporated.
They do short reports. So they've done short reports on like Nikola was their most famous one, basically. They
Oh,
release
really?
these big research reports and it's always going against
Fun.
who's that Indian
Salacious.
billionaire? He was the most
Adani.
recent one.
Adani.
And they spend years making these reports, Riley, with the expectation
Wow.
that when they release them, the public will dump the stock because the report is there.
That's
Yeah.
awesome.
Well,
That's really cool.
the
I see why they call it the
investigators that did-
Hindenburg.
Yeah, exactly. The investigators that did this 2-year report on Square was terrible.
Square actually came out and released a statement around it saying that they've combed through the report and the report actually had some factually inaccurate metrics that go against what Square has publicly put out there and was targeted to basically smear their name, and that Square is going to be, or Block, I guess, is going to be pursuing, some
Legal action.
repercussions with the SEC.
So Adani said the exact same thing. So I mean that is the go-to thing to say. So the stock, Riley, went down a ton on this report. They came out saying that they were doing fraudulent things. They were trying to get criminals onto their platform, or this was a platform for criminals, saying that because they had songs that were promoting Cash App, saying like, I pay my shooters and stuff like this. And they're like, Cash App is trying to get you to buy contract killers on their platform. It's so dumb. It's just rap
It's
music.
ridiculous.
Like, it's just, they said there was a gang in Los Angeles or something like this called the Cash App Gang. Like, as if that has anything to do with Block Incorporated.
And he spent 2 years. I'm like, you spent 2 years and this is what you come up with? There's so many regional banks that are about to collapse, and this is what you come up with. Vadim says
thought
that
that
don't
comment was
forget
funny.
they're also claiming Square inflated their member numbers. Yeah, this is bad. Now, the ironic thing is if their member numbers are lower, their average revenue per user would actually go up, which is actually
Which they didn't want to talk about.
which they didn't want to talk about. But obviously, if investors are betting that the platform is growing and user growth is the metric to identify that, and user growth is incorrect, that is bad. And we all know every company lies about their users. It's on average like 1% to 2%. It's usually off. Twitter, Facebook, all of them, because they can't literally get it completely correct.
I think the biggest part that I didn't like is they were talking about potential 50% of users could be fake or something like this. This is going to drastically affect customer acquisition costs. But like you said, that also goes counter to revenue per user. So that's a completely null and void point. And then also they said that the stock price was going to drop more than the amount of fake accounts that they actually thought was on the platform, even though Cash App is 50% of their business.
Yeah.
Okay. They had not a single point on Square Seller. You're saying that 25% of their whole business is fake, and that's going to lead to a 75% decline. Okay, Hindenburg, what is your bet on this thing? Like let's see the capital behind this actual short sale before you posted this article.
I would buy the dip if it was 75%. Yeah, like if Square falls another 10, 20%, I am buying that immediately.
Are they in cahoots with Apple and Android for being the #1 finance app for the past 3 years? Does Apple know and does Android know that they're faking accounts, but not
It's all those fake
multiple accounts? There's only one install. So like, I don't know. It's such a silly article.
Do you
They're
own
not
Square,
bringing up
Tannor?
a lot of the facts. Yes. So take that with bias, right? But here's another thing. They also spoke about how Jack Dorsey, a lot of members' management team, sold $1 billion worth of stock back during COVID time. The stock was like $289 a share.
Yep.
Okay. And people are going, look at them, how much they were selling. It's $60 today. Like, yeah.
And now you want to short it.
Yeah, I know. It was a little bit silly, but
On April 1st, FedNow is going to start certifying banks. What FedNow is a way for banks and financial institutions and businesses to send money instantaneously in the United States, which is a really huge step for the way that the US's money works. And it's starting in July.
Is this basically not just like Zelle?
Kind of, but it's
Zelle
by the federal
provided by
government.
the Fed?
Yeah. So like if you look at the way that you send money, if you look at the top left corner, you send money, your bank authorizes it on your behalf. And the old way you would take the top function where it goes straight to the other bank. Instead, FedNow is kind of like an authenticator that just makes sure that everything is standard, and then if it all passes inspection, it will just instantaneously be in the other person's bank account, which is probably going to have a lot of like really good benefits to business in America if we're able to like move money faster. It's probably going to affect SoFi in a good way. There's a lot of arguments that it's going to make a lot of competition a little bit more competitive for banks. This is going to be big though.
FedNow could have saved
Yeah, I heard
SVB.
about
They went insolvent because a loan they got didn't reach before the FDIC took over.
Yeah, it was kind of funny how they were in talks with two separate government contacts, the Federal Reserve to get the loan in place, and then they were also in contact with the FDIC. But the FDIC and the Federal Reserve had their own agendas. FDIC shut them down. Federal Reserve was trying to get the money, and we know who won. Do you think this hurts SoFi's business because there's a potential that this is a portion of what Galileo does?
This change in how money works in the US is probably going to push banks to modernize quicker because their back end is going to be bottlenecked even more. I feel like what we've been talking about when it comes to all these old traditional banks like Wells Fargo and Chase, they're going to have problems and it's going to be more expensive to hold things. I don't know, Tevis, you could probably speak to this.
So it seems as though it's just built in house, leveraging just APIs, messaging services, and just data analytics in general. So it seems as though the infrastructure is pretty flexible and modern, which kind of surprises me because it's built in house by the Fed. And no, I would imagine that they would just outsource it to some company. And so that's why I was looking. This is one of those things that is the tide that raises all ships, because whatever business it might take away from Galileo, that Galileo also being a modern and flexible infrastructure technology stack can be the first to adapt, plugging itself in and latching to this FedNow system. Like if FedNow is going to be the network by which these transactions happen, then Galileo can have add-ons that latches onto this. It will be something that is, supplemental to Galileo's services, where everybody is now on this modern infrastructure through FedNow, but Galileo will still have the flexibility and the functionality and the infrastructure to enhance that process for a lot of these larger institutions.
It will be really interesting if you're able to move money from SoFi somewhere else really quickly. But in Wells Fargo, you can't because they have to move internally. It takes time for the money to move. Whereas FedNow can move it from like one place to another place, but like internally, it probably takes Wells Fargo a lot of time to like send out these payments and stuff. So it might actually really show the lacking infrastructure that other banks have compared to SoFi or other cloud banks.
Who knows?
Yeah, and like don't forget, guys, like there's a lot of different avenues where Galileo can plug in, right? It can plug in with the user experience, right? There's customization there that Galileo can provide on that FedNow infrastructure. It can plug in with fraud prevention. Galileo has advanced fraud prevention at the moment, and it can enhance the security of that FedNow system. It can help with reach. FedNow is only in the States, so it can help overall adoption in different markets with the service. It can help with other integrations in the existing FedNow infrastructure. So there is definitely different avenues where Galileo can help sort of level up the FedNow infrastructure.
Tevis, you can introduce this up with the Discord.
Yeah, so basically this chart was initially put up by Michael Burry, and what Vadim did was he added SoFi to that chart. The chart just shows you the unrealized losses versus the deposits above 250,000 as a percentage of total deposits, and where all of these banks sit in relation to this. Why is this important? Well, 250,000 is basically what the FDIC insures. Silicon Valley Bank, Signature Bank, a lot of these other banks had deposits far in excess of that 250,000. So they were vastly uninsured by the FDIC according to that. The Silicon Valley Bank had like some 97% uninsured deposits. This obviously causes a lot of panic. People withdraw their money and cause a bank run. Why? Because if you come out and you're like, oh, 97% of our deposits are uninsured, then chances are if you have money with that bank, you're like, screw this. I want my money to be safe. And so I'm going to put it to another financial institution. And so here in this chart, we can see SVIB at the very, very top right quadrant, Signature Bank of New York, SBNY, outlier there, FRC, another bank that was wobbling towards the riskier end. However, you can see SoFi here with not a lot of deposits over 250,000. So pretty safe and without unrealized losses. This chart is visually representing how safe SoFi is is versus a lot of these other banks from a depositor security in relation to FDIC insurance perspective. It goes along with everything that SoFi is saying with the increase in APY to 4%, with the 2 million FDIC insurance. It's basically signaling that the other bank's weakness does not signal SoFi's weakness. It actually highlights SoFi's strengths.
A lot of these banks can hold some bonds or assets that they have that if they're holding them to maturity, they don't actually have to show any unrealized losses, because even if they are losing because they might have got repriced because rates actually went up, they don't need to show anything. But whenever you're seeing what we're seeing right now, $100 billion leaving the American banking institution right now, you might have to sell those to actually pay the people their money. The idea being that hopefully this sort of gets rewritten. Anthony Noto came out, said that they hope it gets rewritten because they already show fair value on a lot of their loans. So even if they do hold them to maturity, which they're held for sale right now, regardless, most of them, but even if they do, they still show fair value. So they don't really have this problem. He made it very clear that we are not like any of these banks. And this chart absolutely shows that.
Are you starting to see the momentum of the cross-sell between Technisys and Galileo? Any examples you can share on that?
Yeah, we're in conversations with big, large financial institutions. We just weren't in conversations with before. We didn't have the complete stack. Banks are really challenged to innovate. The cost of their technology stacks is just growing exponentially, and their businesses are not growing exponentially. So many of them face the issue of having old cores, old technology stacks. Competition from new entrants and innovative products is increasing, not decreasing, while their costs to actually compete are exponential. So we have ongoing conversations with a significant number of financial institutions that we didn't have a complete solution for before. Having Technisys and having a multi-product core, having SoFi in the cloud, and the other investments that we've made in functionality has been really differentiated. I'll give you an example. Pay in 4 isn't something we're out pounding our chest about. But if you go on the SoFi app and you sign up for Pay in 4, you could do it on your phone as a checking savings account customer if you do direct deposit with us in less than 2 minutes. And you have a card there with a number you can use online. You can use at a register using your wallet with your phone, whether that's an Android phone or an iOS phone. That's completely built on our technology stack. It takes about 6 weeks for someone to launch if they want to. Because we own the whole stack, we built it end to end. We can do checking and savings now end to end. We could walk into a big consumer brand that's not in the financial services sector. Maybe they have a credit card and say, you have 20 million customers. You can offer them XYZ brand checking and savings. We'll build it for you. We'll launch it for you. You market it to your customers. We'll give you a revenue split. So we have the capabilities to help big financial institutions and big, large companies. And the inbounds and the pipeline is very strong. We haven't announced any of those deals. They're going to take longer, but they're going to provide much bigger, durable relationships with significantly more revenue per dollar of cost. The things that we've actually driven success with in terms of dollars, Connect has been a diamond in the rough. This is a natural language AI customer service technology. SoFi itself does RFPs when we want to look at new technologies. SoFi picks Connecta from Technisys as the natural language AI capability that we wanted. Paying for something we're in market with right now and have gotten a really positive response from that. But we'll continue to innovate with both products. We launched a fraud product that leverages the combined data of the overall company and the integration of Technisys and Galileo as well. And that's also been a good opportunity for us to add attachments to existing customers. So bigger customers, more in the pipeline, and more attachments of single product solutions on top of those big businesses.
Man, I'm telling you that I think it was one of the best fireside chats that have happened probably all year. I mean, like trailing 12 months. They give us so many good pieces of information in that call. And most notably, he said, we've been reaching out to all of these retail platforms. They might have 20 million cards, but they don't have checking and savings. We can offer that end to end now. So we could just say, hey, upload that. We haven't announced any of those partnerships right now. I guarantee you they already have some in the works that might have happened this quarter. Here's the thing too, they don't announce all their partnerships. You see maybe 3 or 4 new partnerships that maybe they're public about, and then they go, okay, well, we got 15 new people at the end of the year, right? So how many of these large retail platforms do we already have on our books that we can just instantly swap over onto Technisys as well as Galileo?
One of the cool things that I've learned about SoFi since we started this thing is I thought at the very beginning we were just going to be selling technology to banks. But in this video, like Noto just said that we're talking about people that just offer credit cards. Target offers a credit card. They don't offer checking and savings. But Anthony and Noto could go to Target and be like, hey, we could just set this up for you guys. In 6 weeks, you have 20 million credit card members. And if they sign up, you can start making money passively. That's just something that sells itself. We don't have to be selling this directly to banks. We can just sell this to anybody.
I think the beautiful thing is how they're packaging it too. There's revenue share. This is completely out of the box. It's plug and play for you. You don't have to do anything. We'll do it all. This is how it can add value. This is how it can help your bottom line. And so it just seems like a win-win across the board for these large financial institutions. And that's exactly the sentiment that they need to convey. The fact that, hey, we're not your competitor that's stealing anything from you from a revenue perspective. This is net new high, essentially, that we're unlocking.
And he made a good point that large financial institutions don't have the infrastructure to be able to innovate like this at scale, which is why their business is not growing in the way that it needs to. SoFi's lean. They have the ability to do this. It's built in their culture. They have the acquisitions necessary to get this done. And again, it places them, as you said, Tevis, not as competition, but as partners. That's exciting, man. Because if we see that scale to the logical extent that it can over the next 5 years with all the other parts of their business, it's just a question of how big can they be.
It's sometimes easy to miss stuff. Like when he's talking about it, you sort of get the general gist, but you'll miss certain key phrases and words that he uses. But I mean, if you look through the transcript, he talks about large financial institutions that they're already in talks with. He says, yeah, we're in conversations with big, large financial institutions. We just went in conversations with before. We didn't have the complete stack. Banks are really challenged to innovate. That might not sound as exciting, but then you think to yourself, what are the large financial institutions of the US? They're the Wells Fargos, the Bank of Americas, the Citigroups, These could be the people that SoFi is already in talks with. And the interesting part was that really this was enabled by the cross-selling around Technisys and Galileo together as a bundled offering, because that's what the host really asks around Technisys and Galileo and the cross-sell. On the technology segment, what I did want to ask was, are you starting to see the momentum of cross-sell? Immediately, Anthony Noto says, we're in conversations with large, big financial institutions. We weren't in them before because we didn't have the complete stack, but banks are really challenged to innovate and they need this. So really, Technisys was a fundamental building block that was necessary as a prerequisite to bundle this together and to get them through the door for a lot of these big financial institutions that they're talking to. My prediction all along, if we go back, was that 2023 was going to be the year that we see a huge logo become a SoFi/Galileo Technisys client. And it seems
and we don't think any of the big four would be hesitant to do that.
I just think that it's such a good offer for them to pass up. Now, from a logo dropping perspective, then, we can talk, because if you think of the game theory, it's either competitive or collaborative. While you might think of the inner workings being collaborative between SoFi and, let's say, Bank of America, them dropping that logo, the market might perceive it as some type of competitive, and it just might not be good from a PR perspective, from these banks leveraging a neo or an incumbent disruptor's ecosystem. Like, that's not good publicity for a lot of these banks. And so there might be something there. But from the value unlocked, I definitely think it's net positive.
Yeah. One thing he did mention was SoFi paying for, and that they're not necessarily banging their chest, but they're making sure that they get it right. But they're going to be able to sell that pretty easily. They could set it up in 6 weeks. It is super user friendly. Like everybody that's used it on our own platform on the SoFi app say it's super easy to use. And then also, just like nobody offers that. SoFi is offering something that nobody else has.
But you mean like they would be able to sell Bank of America a paying for product?
Yeah, you can do it like I said, like Target has like their own specific credit card offerings. They could make a checking account there as well and set up paying for. Bank checking accounts are going to like change in the future. People are going to be able to set up their own bank account because it's going to be easy because SoFi can take care of it.
And the interesting thing about this, Amit, because you brought up something really interesting, right? They can set up their own paying for. Well, from the overall market perspective, people are going to be thinking, wow, these large financial institutions are fighting back. They're also introducing a lot of the products that SoFi is offering. They're competing with SoFi, completely blind to the fact that SoFi is actually the one that's powering a lot of these solutions for these large financial institutions. So what will seem as competition from, let's say, Bank of America's paying for to SoFi's paying for will actually really be just money funneling into the technology platform all along.
Another thing too is that it's not just paying for. That's the route that SoFi went down with Galileo's product. But on the opposite hand, these banks can choose whatever they want. We have full flexibility with this buy now, pay later solution. It's just a pure bank standpoint where they have the most amount of data, way more than an Afterpay or a Affirm or one of these companies that are just basing it off a single customer metric, or maybe even no metrics at all, even past a FICO score. If you have all of this customer data, you have some old client that's been with you for 20 years, you see all of their transaction history, especially with a credit card or something like this, offering that card, you'll know exactly how to price it. And that flexibility is completely offered through Galileo. And I do actually believe in that Fireside chat, whenever they said this customer that has 20 million users, I do believe that's a specific customer that he's talking about. I think we already have very large names on our account in general. It's just, I think, like Tevis said, they don't want their name disclosed. Let's just
Thank you, under 64 people, for being here. We'll see you next week. Good night.